Hello and welcome to Finextra. I'm Emily Haller and I'm here with Kriya Patel of the Bancorp. And we're at Money 2020 Europe in Copenhagen. Thank you very much for joining me, Kriya.
Thank you for the invite.
Europe is building strong momentum in the fintech space. What needs to happen to sustain that momentum?
I think there's sort of two or three significant items that come into play as far as I'm concerned. I think one is that there needs to be support from a regulatory point of view. So Europe has created a great foundation, especially if I look at my sector, which is fintech broken down into the payment sector specifically. There's a lot of incubators, hubs operating out of the UK and sort of spread out across Europe now, and it's very much around putting subject matter experts and mentors in front of these businesses to help accelerate their growth. And I think tapping into that key expertise, people who already understand the regulation and the importance of it, and how best to facilitate that in terms of new product streams in the financial services sector is key. The second thing is investment, because these guys, in order for their businesses and their fintech strategies to grow, need money to be able to help drive that forward. And at the moment, it's great to see that Europe is genuinely looking like a great hub for supporting fintech. And what we do as a business is very much help facilitate that. So we're working with MasterCard, for example, in London. We're on an incubator called the Catalyst with the Emerging Payments Association, and that's really driven around bringing in payment-specific technology companies and solutions providers and helping them with 250, 300 payments experts to mentor them, give them good advice, help them with their strategies, connect them for business opportunities and things like that. So I think the money piece is definitely a key aspect. The second thing is having the right support structure to take advantage of the favourable regulations here in Europe.
What are the key differences between the US and the European financial tech industries?
It's an interesting one. If you think about the acceleration with investment in fintech, that's always sort of been at the forefront in the US, especially on the West Coast and the Silicon Valley area, and there's a lot of funds that have been set up specifically to invest in developing that out. But actually, from a technology point of view, Europe has been pretty much accelerated in its growth. Again, from my field of awareness, which is predominantly the payment space, is that we've had chip and pin here, we've had contactless, the adoption to move towards cashless, the elimination of checks. A lot of those aspects have been here and have kind of been well established, and people building solutions on the back of that, especially in the fintech space. The technologies, I personally think, is far more advanced in Europe than it is in the US. The opportunity is far greater and the investment is far greater in the US, but actually I think it'll be interesting to see how those companies cross the pond into Europe, and I think that genuinely that's where the significant opportunities arise, because the technology is still in the catch-up phase as far as I can see it in the US. The terminals for payments, the infrastructure for payments needs to kind of mature over there, away from the traditional magstripe piece around when you think about card payments, or there's still a big check market there, and all of that's disappeared here. Most of the partners that we work with, in particular in this industry, show a keen interest to say we want to fix the problems of the traditional banking infrastructure, right? We can leverage off that because it's tried and tested, but we want to find innovative ways to find solutions to that, whether that's in the B2B space, whether that's in the B2C space. Where I think in the US is like, we're fixing solutions, but we don't really have the same level of infrastructure. We don't have faster payments, we don't have real-time movement of funds. Regulatory-wise, I think there's still an element of catch-up, which our regulators here in Europe have been forced to do, because the industry's moved on at a rate of knots, and they've kind of had to make sure that they provide a framework to support that. So I think that's probably the key difference. The technology is probably more accelerated in Europe, but the investment and the opportunities and the sheer number of companies seem to be larger in the States.
And how do payments habits among consumers and businesses differ between Europe and the US?
It's an interesting question. I think behaviourally, if you look at it at a product level, so if you're meeting the same solution, whether that's a payment solution, whether it's an interaction with consumer, I think they're very similar. You know, if you look at some of the new entrants into the banking space, or the people who are trying to do things differently, like the Simples of this world or the Movens, what they're trying to do is to build a different kind of relationship with from a financial services point of view with the customer. And I don't think that differs greatly in the US or over here. What I do think that is interesting is that the types of relationships that you run. So 90% of our portfolio in Europe today is B2B, right? So ultimately we're servicing the C, but we're doing it through a business-to-business relationship. Whereas where I look at the US, often we're doing as much B2C as we are B2B. So from my environment, I'm looking at that and think, well, strategically, we've made a desired approach in the US to go into that B2C market, but here in Europe, the way we operate is predominantly B2B. You know, we want to do all the technically compliance and regulatory requirements and make sure that they're sound and done in the best way, and allow our partners to do the more creative aspects about the interaction. They understand that interaction with the customer far better than we will, because they're their customers. So I think that's the interesting thing that stands out. I don't think there's a significant difference between the two markets, but what I do think is there's just the sheer different ways that in Europe, because of the technology and the infrastructure and the regulatory regime, that interaction can happen in so many more different sort of variables than we witness in the States today. But it will happen in the States as well. I think that it's just the infrastructure needs to catch up.
Kriya, thank you very much.
Thank you.
And thank you for watching.